Nowadays, you have heard from so many people that you shouldn't buy physical gold, you should buy digital gold. Why? Because you don't need to pay making charges in digital gold. So it's a good investment, right? Wrong. I know that there are some pros if you buy digital gold, but there are some cons as well. And not so many people talk about the disadvantages of buying digital gold. Maybe they don't know either. So in this video, we are going to talk about why you shouldn't buy digital gold, why it's a waste in the name of investment. And if you want to invest in gold, then what's the better way? So watch the video till the end, this is full of knowledge. This is Rohan Verma, you are watching Rohan's Verse YouTube channel. Don't forget to subscribe for more such interesting videos. So without any delay, let's start the video. First, let's talk about the physical gold. If you want to buy gold to wear or to show people around you, then obviously you should go for physical gold. But if you want to invest in gold, then this is not a good way. Because when you buy a physical gold or a jewelry, then you pay for the amount of gold, you pay GST and you pay making charges. And making charges vary jewelry to jewelry. If you buy a simple ring, then making charges can be low. But if you buy a jhumka, which is full of fine work, which looks great, then making charges can be high, even 30 to 40% or even more. For example, this is Tanishq website, and if I talk about a 22 karat gold coin, so here's the price breakup. Gold rate is 4,884 rupees per gram, and the amount we pay for gold is 41,767, and making charge is 3,759. And there's another thing, GST, which is 1,365, and the total amount we pay is 46,893. And if you go and sell your physical gold, then forget about more. I think you won't even get the same price. But if your motive is to invest in gold, then there's an option, digital gold. In digital gold, you don't need to pay making charges, and obviously there's no security issue because it's in your portfolio, so nobody can steal it. But there are so many problems with buying digital gold. First, they charge 3% GST, which is the same as physical gold. And then there is another charge which is called spread charges. The company stores our gold for ourselves, and that's why they charge us, which is called spread charges. It includes holding charges, insurance charges, and maybe they cut their margin from it too. And trust me, this is really bad. For example, suppose that the price of 1 gram of gold is 5,000 rupees, and if I want to buy 1,000 rupees of digital gold, then I'll need to pay 1,030 rupees, including 3% GST. But if I want to sell it immediately, then the sell rate will not be the same. When I bought it, the price of a gram of gold was 5,000 rupees. But when I'll sell it, the price will automatically decrease. If they will cut 3% spread charges, then the price will be 4,850 rupees, and I'll only get 970 rupees. And that's why spread charges are so bad. So in digital gold, you don't pay making charges, but you pay spread charges. And it can be vary from 3 to 6%. There are 3 companies in India which sells digital gold: MMTC, which is government, Safe Gold, and Augmont. And there's another problem that they will force you, they will urge you to sell your digital gold. Either you sell it or you get your physical gold. And when you get your physical gold, again you pay the making charges. So overall, digital gold is not a good investment. So if digital gold is not a good investment, then where should you invest? It's sovereign gold bond, SGB. RBI issues these gold bonds multiple times a year. It's just a piece of paper, not real gold, but its price and returns depends on gold. So technically you are spending on gold, and these SGBs are issued by RBI, so obviously there's no problem. If you buy 1 gram of gold, means you have 1 SGB. There are so many benefits if you buy sovereign gold bonds. You don't need to pay 3% GST, there's no spread charges. Obviously it's a piece of paper, it's not real gold, so you will not need to pay spread charges. And if you buy these bonds online, then you will get some discount. It's total tax free, there's no any capital gain taxes, and plus you get 2.5% interest per annum. I mean, nobody is giving you interest on gold investments, but these bonds are. These 2.5% interest is simple interest, means it's taxable, you need to pay tax on this, and you will get this interest on the amount you spend on SGB. And you get this in every 6 months, means 1.25% interest in every 6 months. But there's a thing that you need to hold it for 8 years, and after logged in period you will get the amount which will be tax free. You can also redeem it after 5 years, which will also be tax free. Listen this part carefully. If you redeem your bond after locked in period, which can be 5 years or even 8 years, after 5 years if you redeem it from RBI, then your amount will be tax free. But if you redeem it from somewhere else, then you will need to pay taxes. And after 5 years you will get an option to sell your bonds in every 6 months. Here's another thing, that you can convert it into your demat account, and if you do that then you will need to pay tax when you sell it. And the person that will buy the SGB will either continue the locked in period, or that person can sell it to another person. That's it for today. I hope you liked the information. Don't forget to leave a like and subscribe our channel for more videos. See ya.